I don't want to alarm you. I don't want you to get too excited, but Bitcoin is officially breaking out here live on our stream with Tillman and Andrew. It's happening. I'll show you the chart. This is real. This is not a false alarm. It might actually be time. We're going to discuss this and everything else happening in the markets. Let us go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit that like button. I literally just sent a tweet while doing that intro. I am a master multitasker. I wanted to show the world the beautiful breakout that we have right now on Bitcoin. I'm going to bring on Andrew and Tillman. We can look at it. But here you go. Okay, you had descending resistance yesterday. You had a break through that on increasing volume. That's good from a technical perspective. But more importantly, it bounced off the 50 MA, now above the 200 MA. And if the day can close like this, this is the first higher high in a series of lower highs and lower lows since the all-time high. This is the kind of thing that makes technical analysts as excited as Kanye West is when he sees his cousin. $89,193 Bitcoin right now. But I think more impressively, can I show you guys another chart? This is interesting. This, for all of the correlated homers who think that Bitcoin just trades like big tech, this is Bitcoin versus the NASDAQ. Does that look correlated to you?
No.
Because last I checked, Bitcoin's making an all-time high again as we speak against the NASDAQ. This is Bitcoin versus big tech. If those look like assets that are trading together, then I have a luxury condo to sell you on the moon. Those things are not the same.
Yeah, it's the Bitcoin has a way of surprising to the upside at times where nobody expects it to surprise to the upside. It's got a decade of history of doing things that we don't expect it to do. At times we don't expect it to do it. The truth is that we're in a moment right now where, at least as it relates to commentary, all the commentary is negative. But here's the thing: Bitcoin doesn't have ears, right? It's not interested in commentary. It's simply interested in capital, and capital is taking flight into Bitcoin in a meaningful way, and that's why it's going higher. You know, oftentimes we get bogged down in price movement associated with this narrative or that narrative or this or that. The fact of the matter is that when Bitcoin's price go up, there are more buyers than sellers, period, end of story.
Funny how that works.
Yeah. And so there are more buyers than sellers right now for whatever reason. And it's interesting that as market dynamics collide, you know, across global markets associated with all sorts of narratives, the Fed, Powell versus Trump, tariff, blah, 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 blah. Bitcoin has kind of been allowed to get back to its ethos, which is, you know, an uncorrelated asset, right?
I thought you were going to say up only. I thought you were going to say up only. The original ethos of Bitcoin being up only.
Yeah, Up Only was a terrible podcast. Anyways, so moving to an uncorrelated asset, right? It's an uncorrelated asset disassociated from narratives, and we've been seeing that over the past couple of weeks, and it's great to see. Frankly, it's really great to see.
Yeah, Bitcoin to me is proving in this cycle that utility matters. That's the big thing for me, is like, remember in the last cycle, everybody was talking about the utility of coins and NFT utility, and Bitcoin has been deemed to be an anti-inflationary instrument. The correlation that Bitcoin does have is inflation. It's the best indicator of inflation that we've ever invented on the planet Earth, because it covers the global inflation rate, not just the domestic inflation rate. It cannot be manipulated. Just like if you look at the last 20, 30 years of the price of gold and silver, gold's breaking out right now. but it's been highly manipulated. There's been lots of lawsuits about it being manipulated. So why would you manipulate an asset like gold or silver? Well, because you need to correlate it to inflation and at the appropriate rate to sell the story. Bitcoin is breaking all of that. You cannot manipulate the price for a long period of time, and we're seeing that right now. I do think that knee-jerk reactions in the global market, when liquidity is tight, everything sells off, right? But then everybody starts to sit around and go, okay, well, we're sitting on a bunch of cash now. What are we going to do with the cash during this next phase? And if you look at what could and what should happen, there's going to be a lot of money printed over the next phase. That is something I think everybody can agree upon. And if you can agree upon that, and you know that what?
Not everyone.
Not everyone.
Mike McGlone says we learn the lessons of the past.
We never learn the lessons of the past, Mike.
We never learn the lessons already. I'm not trying to be critical. I'm saying that.
What if the lessons of the past were to continue inflation? Because that's what we've been doing. Like, listen, our economy is built on that. The question is can you innovate? How long can someone or a country innovate to keep up with its inflationary rate? And I would argue we're on the precipice of the largest change in human behavior through quantum, through AI, through all of the decentralization of computing power. Like, that's going to change the world in ways we can't even predict or comprehend, and it's going to make it a lot more efficient. It's going to make it a lot more profitable. It's going to expand technology to all the corners of the globe, which create new markets where more money can be floated into the market because it needs it for liquidity purposes. Like, all these things I think are pointing to a new age of technology, an age that really, I mean, if you just look at what's happening in the AI space, my kids were telling me something yesterday, and they were like, there's no way that'll happen in our lifetime. And they don't understand how quickly AI is doubling its intelligence and tripling. Yeah. It's orders of magnitude beyond even our comprehension. It's scalability at rates that we've never seen before.
I asked Paolo Arduino, the CEO of Tether, on the podcast recently, and every conversation, by the way, with any builder in crypto now goes immediately to AI and exactly what you said, the exponential rate of growth. Because I always ask people, what's your vision? 5-10 years, what does crypto look like? And 2 or 3 years ago, it was a very different answer than post AI. Now his answer was literally, okay, well, obviously we're going to have 1 billion robots, humanoid robots in 10 years, obviously powered by AI, and they're going to be transacting in Tether. And you're not going to have any part of it, right? They might be doing it on your behalf, on their own behalf, but that is what's coming. Now, I can't say that it will be actually Tether, but now you can't be like, oh, in 10 years, maybe we'll have a meaningful level of adoption. Nope, the robots are going to be like dominating us with AI. No question.
Well, if it makes sense that if crypto brings instant settlement, but the risk to instant settlement is errors, right? Then having an AI agent sitting on top of the transactional power of a human being and or a corporation makes all the perfect sense, because there will be less errors. It will cost you less to deploy. And quite frankly, the accounting's done as the transactions are reading on like it's all integrated. The efficiencies of scale there are enormous. It kills multiple industries in one fell swoop.
Yeah, here's something interesting. Speaking of instant settlement, because you gave me a nice segue. The CFTC seeks input on 24/7 derivatives trading, perpetual futures. Okay, for those who don't know what that means that we're considering going full BitMEX on United States futures exchanges. This is actually something that's being considered, but we already know that I think 23/5 has been approved for the NASDAQ, right? 23 hours a day, 5 days a week.
Yeah. Mm-hmm.
That's because of crypto. The pressure of crypto trading 24/7, 365 is making a definitive change in the way that markets will trade. But they're also looking at perpetual futures, a type of contract popular outside the US and gaining traction in digital asset trading. Yeah, every single exchange that's making billions of dollars, that's the contract that they're doing it on, could be coming to the United States. And all of that has to do with that instant settlement that you're talking about.
who are the CFTCs and the SEC's constituents, right? It's the Charles Schwabs, it's the Robin Hoods, it's
More
these
money.
organizations, right? It's these organizations that, you know, manage wealth for folks. And so for all intents and purposes, those individualized entities are beholden to what their clients want, right? And so if they're seeing meaningful movement away from their platforms to places where they can get 24/7 liquidity and 24/7 optionality, then at some point they have to go back to their regulators and say, hey, we're losing clients, we're losing assets, we're losing traction with a more than comfortable percentage of customers, and we don't like it. So we need to make some changes. So let's have a conversation about what those changes are. Charles Schwab just announced that they're going to add crypto trading to their platform. That's mind-blowing. Okay. Charles Schwab has been around since the freaking 1800s. Okay. So if Charles Schwab is going to add crypto trading to their platform,
I thought Charles
then
Schwab
by
was with Trump the other
extension,
day.
they have to be open all the time.
Well, they have to be, and if you look at like Coinbase and you look at Kraken, you look at Binance, Bybit, these monster exchanges are not only changing the paradigm from TradFi exchange, how they operate in terms of 24/7, 365. But look at the amount of money that we as crypto people are willing to pay in fees in the crypto space versus the traditional space. In the traditional space, it's a race to the bottom. It's like, let me give you a little bit of incentive to come to our exchange because we can reduce your fees from 25 cents a trade to 23 cents a trade. Does that sound good? I mean, it's like nothing. You're arguing over like table salt type of incentives. Whereas on the crypto side, how have they gotten new members? It hadn't been by reducing their rates. It's been by putting new coins on there that people want to buy. That is why people go to new exchanges. When someone launched an ICO, why did you open up a new exchange? Well, because that ICO launched on that exchange, and that was the only place you could get it. And so one industry, crypto, is focusing on innovation to drive growth, which allows you to charge the customers a lot more money, a lot more profitable business with a lot fewer employees, a lot more scalable, all of the above. So you're seeing a major shift, not just in timing, but in profitability in every aspect of being an exchange.
And that's why Solana meme coins are flying and the rest of the market is languishing, because in the past cycle, when you wanted to trade Doge, you had to sign up to an exchange, wait 3 months because there was such a long backup, and then you could get access to trading Doge. Now you just get a wallet and you go into the metaverse or wherever the fuck these degens are doing whatever the fuck they're doing, because I have no idea still how you buy a goddamn meme coin, because I'm a boomer.
You don't do it.
But they go into the computer.
The
files are in the computer. They go into the computer and they don't need to sign up for anything, and they can just throw that money. It's like a slot machine that'll take your full $100,000 instead of taking it $1 at a time. Like you just throw it all in there and done.
Well,
that's why.
That's the point, is that traditional legacy wealth management organizations are not stupid. And what they realize is that at some point there's going to be a wealth transfer from boomers down to those other generations, the Gen Z, millennial type folks who know how to do what you just talked about. I don't know how to do it either. I don't want to learn. But there's a reason why decentralized exchanges have enormous amounts of flow on a daily basis, right? That still exists. So if you're a Charles Schwab, if you're a Robin Hood, and you're trying to keep up with those type of entities, which, by the way, a significant portion of those entities, Kraken, Gemini, Coinbase is already public. There's going to be others. It wouldn't surprise me if a decentralized exchange goes public here in the next 24 to 36 months. A Uniswap, right? They're completely unfettered at this point. So those types of entities, again, are really pushing the envelope associated with, the idea and how you walk through the process of quote unquote wealth management. What does access look like? And so again, the CFTC talking about perpetuals, talking about 23/5, which will turn into 24/7. Again, if you're 24/7 and you're BlackRock and Citadel wanting to do that, tokenizing trading for all intents and purposes, and open up an entirely new exchange, 24/7 is way better than whatever it is 8 and 5, right? Because 8 and 5, you're limited as to the amount of flow that can happen, which means you're limited to the amount of capital that you can consume. 24/7 blows that particular top off of that. So the ability to make more money just increases by a figure of about 3x.
Well, and if you love economics, like free markets are supposed to be unencumbered. So somebody's saying, "Oh, you can't trade because I'm asleep." That's not unencumbered. Like we should be trying to develop markets that have as little friction as humanly possible based upon where we are on the technology curve. And this is a massive leap forward. And I don't think I will tell you this. I was very upset about what happened with the whole XRP lawsuit and that whole debacle over the last 4 or 5 years. I am very pleasantly surprised with the purchase of this exchange. I didn't understand the stable coin when they launched that, but they have a plan and they seem to be on the same wavelength as the rest of the big boys, which is we need exchanges propped up that are fully integrated across TradFi and crypto. Because if you do that, you by definition are 24/7 and which side of the house is going to win. So it even pushes the market further in having to compete with one another because they're literally side by side. And it gives you a ton of arbitrage opportunities that you can't otherwise harvest and can't take advantage of. So I think they're onto something over there. It's going to be interesting to see because, again, back to like this cycle being about utility. That would be a great utility case for XRP. It's a depth of liquidity. They could provide high interest loans and all sorts of lending functionality within the exchange based upon how much XRP they hold. It's instantly settled or as close to instant as you'd ever want. Like there could be some real, again, I still say that a lot of these altcoins are going to be gobbled up by private industries and they're going to be put to the test as it relates to the use case and to the efficiencies they can provide. And I think a lot of them are going to be implemented across major, global corporations as efficiency deltas, as efficiency improvements.
There is a utility associated with crypto that has been literally staring us in the face that we don't want to look at. And that staring in the face is, again, what we've just been talking about for the last 15 minutes, is the adjustment and significant changes to traditional markets and how they function. Like that in itself is utility. That in it is of itself is the reason why crypto is compelling and has made meaningful change across finance. And so, we get these, high-minded folks that have been, VC type folks in the world of crypto. And the reason why they're at this point, I'm not going to name names, but I've seen several posts over the last few months, associated with, being well, if I were to melt some cheese, I'll just leave it at that. So just disappointed in the overall, the overall value associated with crypto, right? Like, oh, crypto's boring now. Crypto's not what I wanted it to be. Crypto hasn't, given me. All that is just crying over spilled milk / crying over my bags aren't worth what I hoped they would be worth. Like that's what they're crying over. So it's not about utility associated with some weird dick butt app that you thought was cool and you had a party at one point and that was interesting.
But
right?
It was all dudes.
Of course it was all dudes.
All dudes.
But it again, we're talking about utility that's making massive and considerable change to financial markets. That's utility. That's utility at scale. So if you want to talk about what has crypto done over a 5 and 10 year period, Bitcoin, need I say more? Stable coins are taking over transactional value as we speak and will continue to. And then massive changes to how financial markets work and function and are structured. I don't know. That's pretty serious stuff, man.
Yeah.
Well, and you have RWAs knocking on the door, like they're next, right? You're going to start seeing big real estate developments being. I was trying to do this 6 years ago because it's a fantastic use case, but all these institutional development funds that you have to have $10 million cash to contribute in order to get in, and it's invite only. And it's only because the development's costing, some crazy amount, 300 million, $1 billion, and they don't want to have to do mountains of paperwork to collect 100 grand or 50 grand. They want to just do a little bit of paperwork and collect $10 million chunks or above. And so what does that do?
Me too.
That precludes a lot of people from participating. A lot of people. Well, blockchain can change that. Blockchain can absolutely democratize the access to those types of opportunities because all of that paperwork is done on chain, and you don't have to do it on the paper anymore. It's done automatically. So there's these things that are going to be coming out, I think, in the very near future that, to Andrew's point, are changing markets, right? Changing access points to markets. And that includes, in my estimation, commercial real estate and institutional type investment opportunities.
I don't mean to interrupt, but I know I was laughing on the side, and there's a reason. I think that we just had the best accidental comment in the history of comments in the chat.
Uh-huh.
Okay.
What is it?
Athena will blow people. wait. Next comment. Mind. I can't. I'm sorry. I'm sure I was listening to you guys.
Well, between the institutional adoption of dick butts and Athena will blow people, we've set a new
Fibbo
standard.
says dick butt app.
Yeah,
is that what I heard? Yes, the crypto dick butts were a very popular NFT collection and community.
Yeah. Mm-hmm.
Melton Demir is a very passionate crypto dick butt. I know that. It's a real thing. Oh man.
Yeah, well, therein lies literally the last 4 sentences that were uttered on this show. Therein lies the different levels of real world actual changes associated with crypto and stupidity, right? I mean, those are the differences, right? And so you can do some stupidity stuff and build a community around stupidity and make some money around stupidity. I mean, there was a world back in the 70s where pet rocks sold like hotcakes, but we're in a time period now where you're having Charles Schwab make, put out press releases associated with crypto trading. You have the CFTC and the SEC making adjustments to the way that markets work. The NASDAQ doing the same. These are all happening at the same time.
You have the president launching meme coins. I mean, that says it all. I mean, that tells us that everything that we could have thought would happen has happened, because that's kind of the final straw.
Well, you also have, again, with these structural changes associated with markets, it's my belief that 2 to 3 years from now, when we're still doing this podcast, the conversation will be very, very different than where we are now, and it will probably be more serious, right? Because we're going to have Bitcoin mortgages, we're going to have bit bonds, we're going to have options that turn into a huge market. A reminder to everybody listening to this that the reason that Larry Fink connects Bitcoin's total market value and cap in the future to the mortgage market and cap that happened over a period of time, somebody like that doesn't say that unless they believe it. Remember that everything that you think that people in crypto Twitter take what you and I, Scott, say, and they hold us, accountable for it to some degree. Imagine what Larry Fink says and who holds him accountable. And it's a whole nother level, right? So for him to say something like that, that lives forever. It lives forever. So we're headed into a space serious.
I don't just look at it from what he's saying. I look at it as why would he say that? Why would he say that Bitcoin is the same as the mortgage opportunity? Well, I think it's because he understands one thing. You can't, like Fannie Mae and Freddie Mac, why would anybody, including the government, buy and back mortgages endlessly with very little on the ground due diligence against the asset? Like, why would that be a good business model for anything, any corporation or any government to embark upon? Well, because they know one thing, that they're going to continue to inflate the dollar, and there's only one corner at 101 East West Street, right? Land is scarce. By definition, it only has one spot. You can only be standing on the one lot once. So there's this natural rise in price that they can guarantee is going to happen. So if you're buying mortgages for a 30-year period, you're really safe, because 30 years from now, everything is going to be more expensive than it is today. Period. The end. And so, like, land and Bitcoin do have this one characteristic that allows you to build infinite liquidity on it, in my opinion. And and you can bank it from every corner in every local regional bank, and you can have all that debt flow up to a central entity that buys it and holds it for a long period of time. Like, that's, in my opinion, why he sees the beauty of where Bitcoin can go, because those characteristics allow it to go there.
I've had a couple meetings, which I rarely do, with projects of late, things that are being built, things that are being launched. And the most compelling ones right now are all Bitcoin based. I mean, Andrew, to your point about, Bitcoin bonds and Bitcoin backed real estate. I mean, these haven't even launched. I mean, maybe I'm not supposed to even talk about them yet, but like People's Reserve is one. They believe that Bitcoin is effectively the most pristine form of collateral. So the things they're going to do are crazy with bonds, mortgages, self-repaying mortgages. I mean, it's really crazy. I hope that at some point when they're launching, I'll have them on. Meanwhile, I don't know if you've seen this company. It's been on a bunch of podcasts, but doing basically Bitcoin denominated life insurance. So it's the same as any whole life insurance policy, but instead of being denominated in dollars, it's denominated in Bitcoin. I mean, these things are so obvious that both of them require the belief that Bitcoin is in itself money and a viable denominator. But the point is, we're going to end up getting every single product that we have denominated in dollars, eventually denominated in Bitcoin, if Larry keeps going. We're going to get that anyway, but
that's correct. And by the way, it's my belief that Larry thinks that his particular stack of Bitcoin and his customers' particular stack of Bitcoin is going to be the base layer for, again, what you just described and what you just showed us. There's not just going to be two companies doing this 2 years from now. There's going to be 200 companies doing it 2 years from now, because it's going to happen really fast. So again, we're in a spot where 2 years from now, we're going to be talking about the Bitcoin economy and alpha opportunities associated with arbitrage, with bit bonds, bit mortgages, and bit options, all at the same time, right? And so the scale of liquidity associated with it is going to explode, absolutely explode.
This is interesting because we obviously have had months of outflows from ETF products, from investment products surrounding crypto in general. For a little while there, it was like, hey, 10 million inflow, hooray. Yesterday, ahead of what's happening right now to some degree, 381 million inflow. So obviously, yesterday was a huge volume day on a big candle spread breakout. So not entirely surprising, but it feels like in this case, it was almost front running the big news, right? That we got a hint from ETFs of what was likely to come for Bitcoin price, which is not usually necessarily what we see. But 381 million inflows right now after a long trend of outflows and no discernible reason when stocks are down and there's fear in the market. What do you make of this huge spike? Who is that's buying? I mean, usually it's a bunch of retail buying ETFs, but I don't think everybody got together yesterday and was like, this is my time. So there's something else happening here.
I think the tariff situation was it was shocking to me because, number one, if you really think about it, if tariffs if tariffs escalated and we had a very high tariff environment globally, you can't tariff Bitcoin. It's tariff proof. So that asset would, I think, eventually thrive even more so. But the knee-jerk reaction of everyone when they don't understand what's next is to go to cash. And so you saw this massive sell-off, this huge transfer of position. And I personally think that that's the sign that the institutions, like, you have to create volatility inside of this type of an adoption curve in order for them to accumulate their position. And so bad news, when retail freaks out about bad news, they take advantage of it. They don't have to, they're not looking at a 1 year, 2 year timeline. And it's like the people who are bored with Bitcoin at 83,000 or 85,000. They're looking at it and going, man, what else can I put my money into? And or the economy is hurting a lot of people and they may need the liquidity. Those types of circumstances, though, are what fuels the next leg of the race, because the institutions they're gonna do everything in their power to keep it volatile and keep it as low as possible until they have their bags.
I think I read that right now, it's going to be previous to the last 2 days, but Bitcoin is actually historically low volatility for Bitcoin.
It is.
And I know that it's been far less volatile than the S&P. So this whole 3 times volatility of the stock market, that shit's invalid now.
Well, I would say it's invalid it depends on what time frame you're measuring.
Time frame.
Yeah. Because if you look at some of the wicks that Bitcoin has incurred over like just a 1 hour time frame, for example, it's still there. That you can play those pretty nicely.
But we also did see on a fake tweet about a 90-day tariff pause, the S&P go up about 10% in 10 minutes.
12%. NQ was up 12%.
It ended the day 12%, which, by the way, like, not a sign of a healthy market.
No, it's not. Well, it's thin liquidity, thin trading.
We're in a position where, and I know Jeff Park has talked about this a lot, where volatility.
If he did, we didn't understand it.
Yeah, volatility is the name of the game. And by the way, he commented on are there 2 or 3 Jeff Parks, and we just don't know it. Yeah. He's like, where did this conversation come from? I was probably at another place doing my other thing that nobody knows
he was
about.
In the metaverse.
Right.
Yeah, he was talking to Michael Saylor.
But his point about, grabbing volatility and squeezing alpha out of it, he's spot on. There's going to continue to be volatility. What's it going to look like? Where is it going to show up? I mean, that's the game of Wall Street and creating outsized returns on a go forward basis. So is it going to be in Bitcoin? Is it going to be in other tokens? Is it going to be in traditional markets? Is it going to be in options? Is it going to be in markets and product that hasn't been created yet? Like, again, a reminder, last year, the most traded ETF on the planet was 2x long NVIDIA, right? What does that presuppose? That presupposes that 2 or 3 years from now, will it be a surprise if the most traded ETF is 2x long or 2x short Bitcoin? Yeah, it absolutely does. Or, shocking, could it be 2x long or 2x short a Solana ETF or an XRP ETF? Because those are coming. Paul Atkins just got, finally stamped in, and he's now the guy at the SEC. Like, all of these ETFs are coming, and they're going to come quick.
I think it's going to be a little bit of that, and I think it's going to be a lot of companies announcing that they've gone to the Bitcoin standard. I think there's so much potential volatility that's pinned up in an announcement like that it's almost like it's the highest form of gambling that exists, which tells me it's going to present itself in the markets. Which, what I mean by that is, like, if GameStop if GameStop gets a little momentum and nibbling into the Bitcoin standard like they are, and then they decide to go full tilt, like we're buying $3 billion in Bitcoin, and they announce it overnight. Why would a company like that do that? Well, they have a multiplier effect in their share price. They have incentive beyond the Bitcoin. So it doesn't matter that they have to buy the Bitcoin at a higher price. That's what Michael Saylor has been talking about, that a lot of people kind of get lost in, is he says, I buy all the tops. Why does he buy all the tops? He buys all the tops because that's when he gets the most leverage against his share price. When Bitcoin's at its highest price, because his share price is a multiplier of that of Bitcoin's price, he gets leverage that doesn't exist when it's on the dips. So he gets to buy more Bitcoin, which is a self-fulfilling prophecy in the direction of where his stock goes and where the price of Bitcoin goes. And it's that kind of infinite money loop. So if you see corporations, I think that, Twitter's been buzzing for a couple weeks now. There's a huge corporation that's about to be announced and nobody knows who it is, and it's bigger than GameStop, not Game. Well, I think that's going to be really, really prevalent and important. And even Jeff Park and Bitwise, they put together that ETF. What is the ETF? It's companies that have
exposure to Bitcoin.
Well, not just exposure, that have adopted it to, exactly. Well, not just adopted it, but adopted it to a certain standard, to the Bitcoin standard that they've set, which is a huge high bar. It means that you're basically going into the Michael Saylor camp and leveraging everything that you've got in your company towards that effort. It's not like, hey, we're going to add 5%. It's like, hey, you're going to have $1 billion worth of Bitcoin on your balance sheet, and you're going to have X number of percent of your cash availability put into Bitcoin. So that type of thing, I think, is going to provide a massive delta opportunity in terms of trading over the next, year, 2, 5 years, because companies are going to continue to come out and announce it because they need to raise capital. And it's the easiest way to raise capital right now. If you have a public company and you're sitting on a lot of cash and your industry is dying because it's a legacy industry, this is like no-brainer territory.
Well, the just look at GameStop, and again, another bad take by high-minded VCs. There was a take out there that, well, just look at GameStop, and adding Bitcoin to your thing is now it's a little bit played out. It hasn't had the response that they thought that it would have. GameStop was less than $10 a year ago, and now it's at 27. I don't know. That seems like a reasonable increase in share price associated with being adjacent to Bitcoin, adjacent to Saylor, adjacent to the conversation, and then now making a move to do it. So a borderline 3x, to your share price seems like a meaningful outcome. So volatility is here to stay, and we're going to put ourselves in position to benefit from that volatility. Ergo, Scott, if you don't mind,
I've got the Bitcoin one.
There you go. There you go. No, that one right there.
You don't have to tell me stuff anymore.
Yeah, don't tell you just do it anymore. So here's the thing, right? So volatility is going to continue, and it's very, very difficult to stay up for 24 hours and try and be the best trader on the planet and grab top ticks of green candles, bottom ticks of red candles, build a position that way, and create cash yield. That's what we do at Arch Public, and we do it in a way that nobody else does it. So, a picture absolutely says 1,000 words, and there's the picture. Look at the purple arrows at the tops of those green candles.
Gotta tell you, man, it sold before we're going to 400,000 by tomorrow. I'm sorry.
Yeah, but it only sold a tiny little amount because it's a long bias strategy, right? It's a 2.25x long bias strategy. So all the times that it purchased down at the bottom of those red candles at 78, 79, and 80, you still hold huge amounts of that position while, again, creating cash yield. Here's the other thing about the Bitcoin ecosystem, and all the talk so far this year and most of last year was, well, how do I get yield on my Bitcoin stack? I've got a bunch of Bitcoin. It's tripled in price. How do I get yield? Where do I get yield from without giving up, access to my Bitcoin, like leveraging or lending? Here's your answer, right? Here is absolutely your answer, doing it and giving you yield in the middle of the night. That top tick candle on the green candle right there was at 2 a.m. Even if you're Scott Melker, the greatest TA guy in the history of crypto, you can't pull that off.
Ever. I used to do, but I used to be able to pull that off because I'm not kidding. Like in the very end of like when I would go back and do a couple random DJ gigs here, I would sometimes have a chart open.
Well, okay. Well, there you go. You've got to be
3:15. Everybody's leaving.
Yeah,
XRP. Let's go.
You've got to be a DGen DJ that's up at 2:30 a.m. That's also trading Bitcoin.
$90,000 American dollars for one single Bitcoin. Doesn't matter. One Bitcoin is one Bitcoin.
Mm-hmm.
Yeah. Well, here's the thing. It's like,
how about XRP though? Look, here's XRP.
We'll talk about that in a minute. Go ahead, Tillman.
Well, volatility is an asset. We keep hearing Michael Saylor say that. He's like, it's a feature, not a discount. The feature of volatility allows you to set traps both ways. If Bitcoin goes up by 2.5% on a 4-hour candle, sell this many dollars worth. If Bitcoin goes down on in this time frame by this percentage, by this many. So what it does is it allows you to, if you've ever been catfish fishing, you set the lines out, or tuna fishing, you set the lines out and you go inside and you troll and you wait for the fish. And that's a way that keeps you unemotional. It keeps you from having to sit in the chair and trade. There's a lot of advantages, but it also allows you to execute quicker and with more precision than you could otherwise, because otherwise you're left to your own devices. You start convincing yourself, and quite frankly, you can't move your finger fast enough. So there's all sorts of benefits of using automated trading, and that's why we've made it free. We want people to see behind this curtain. We want people to know the power that exists. This type of technology has been being used for decades, literally decades, by all the firms. And so now this is for you. You can download it. You can have it on your computer. You can absolutely run it for free. You can use it across multiple symbols: XRP, Ethereum, Solana, Bitcoin. You can use it to accumulate. You can use it to unaccumulate or to sell out of a position. You can use it for the chop and trying to create cash yield based upon your own custom percentages and your thresholds. It is absolutely a institutional grade tool that is now available to you.
And here's an interesting concept. So the term algos, has some sort of a negative connotation in crypto, but in traditional finance, that is how business is done. Like the New York Stock Exchange 40 years ago had 7,000 people on the floor screaming at each other with paper. Nobody exists on that floor anymore. Why? Because algos exist. 80+% of all transactions in traditional markets are affected by algorithms, period, end of story. You don't have access to it because it's only used by institutions and the highest of high net worth people that have access to it. We've brought it to anybody that wants to use our free product with $200, $70, $500. You can use our product and our technology for free. So we're democratizing. We're literally democratizing finance. We're bringing you technology that you don't have access to unless you're 50 million long at Goldman Sachs. That's what we're doing.
Seeing is believing. That's why we've made it free. Come check it out, and we'll help you learn the feature sets. We'll help you navigate learning the software until you can literally play with it for endless time periods. Like we have about 4 different base strategies across 4 different symbols, and you can change the parameters to make an infinite number of strategies. So this is literally not a one size fits all. This is a fully customizable software suite is the point. And we'd love to show it to you. We're very passionate about it. Volatility can be an asset is the bottom line, but you need to be ready for it. And if you're not sitting in front of your computer waiting with your finger on the mouse and you haven't done all the math, then you're not ready for it. This allows you to do all that, set it and forget it. And when those things happen in the real world, then you get to take advantage of it.
So what's going on here with the XRP algo?
So it's good to highlight it. You pull up that tweet. just the free version of our XRP algo in the last month has generated $1,800 in cash yield. Just the free version using $10,000, $1,800 in cash yield.
And you end up with more XRP.
And you end up with more XRP and $1,800 more dollars just on 10 grand. Okay. If you're in our tier 1 concierge program and you're using 100 grand in that algo, you're generating $18,000 in cash yield and you end up with more XRP. That's the point, is that the diversity of outcomes associated with what we do. If you want more cash yield than that, you work with one of our staffers and they make some adjustments on your behalf and say, okay, yep, here's what it looks like on TradingView over the last year. Is that something you want to do? Okay, yep, we'll set it for you like that. Now you're getting more cash yield and a little less XRP. You want more XRP and a little less cash yield? Let's plug that into TradingView as well. This is what it looked like in the last year. You're comfortable with that? Okay, click. Now you're done. You just check your phone every once in a while and see what's happening. That's it.
So good.
Yeah.
I don't understand why there's haters. Yeah,
They haven't tried it. It's
try it for free, man. Try it for free. Try it for
throw $50 in there and try it.
Yeah.
Might turn you into an XRP maxi. Yeah.
Whoa.
Get Sailor in there, just flipping ripples.
Arch Public is taking over the whale experience at the Bitcoin conference. So, maybe slow down on the XRP commentary.
We're launching our fresh meme coin and XRP algorithms at the Bitcoin conference on Industry Day. You heard it here first. Going right to the perfect target audience.
Yeah, it's no, the whale experience this year. It's in Vegas. It's crazy. I just spent some time on the whale experience at the Bitcoin conference website yesterday. I hadn't looked at it in a while. Man, it's gonna be something. It's
just
gonna
swim around like this.
Yeah, it's gonna be.
But it's a whale experience. But instead of plankton or whatever, they're just tequila.
Yeah, that's right. That's right.
Yeah, I'm going to be interested to see how many people from Washington show up, because it is officially mainstream now. Like, Trump broke that seal last year. And so I would anticipate David Sachs. I think he's speaking there. And I think.
Did you see Peter Schiff is speaking?
Yeah, don't get me started on that.
On purpose.
I know. I want to be in favor of that, but I'm not. Even though we're going to get to boo him on stage and throw things at him, it's still not going to be. Listen, he's just the largest troll of all time. I guess it's fitting to have him at the conference and have him dance in a jester suit for us or something like that. But I don't get
top here, by the way.
I mean, that's the reason why he's showing up.
This is gold right here. This is the daily candle. If we print a candle like that, that money's going into Bitcoin.
And the other reason that he's showing up is he runs a fund that's frankly terrible. That's a bond fund. And he hopes that he can convince some people at the Bitcoin conference to put a little money in there. That's it.
Can't have a fund without fun, Andrew.
Yeah, that's right. Well,
and Peter
point being is, by the way,
Peter is fun though. Actually, I've gone drinking with Peter Schiff. He is not who you think he is on TV.
Well, he
has a good time.
He's down in Puerto Rico, right?
He is dominating down in Puerto Rico.
Yeah, down in Puerto Rico.
What happens in Dorado stays in Dorado. I can tell you that. But
I believe David Bailey's down there in Dorado too, right? Isn't David Bailey down there in Dorado?
David Bailey's in Guaynabo, which is where people with kids that don't want to pay a premium to play golf live. Yeah. But Dorado is a lot of.
Yeah. Listen, Schiff has.
You know what? I like Peter. I don't want to put anything on a quote that, but they're having a good time down there.
One other thing about the Bitcoin conference, and it's not something that we're going to shout on social media, but something that we can mention as a point of interest. We're going to be doing a giveaway associated with our presence at the whale and the deep and all that stuff. That's just for whales only and just for the audience in that room. That giveaway is going to be extraordinary. So if you're going to be attending the whale experience at the Bitcoin conference, keep your eyes open for what we're doing. Yeah, it's going to be really something. I don't think there's ever been a better giveaway than this at the Bitcoin conference. I can't imagine that there ever has been. Can't imagine it. So
it's going to be a fun time. I've heard
$500 in XRP pre-funded in your Arch Public algorithm by Gemini.
It's a roadmap to 587.
Dude, it's going there. If you don't believe that one XRP is going to trade at $587, I don't even know why you watch this show.
Listen, selling it on the OTC. That's what I've heard. In some countries, it's already trading at 587 OTC. So we'll find out if the market.
Obviously, I heard it on the internet. So, guys, archpublic.com. Archpublic.com. You can see it right there. It's not that hard. See it? That's how you spell it.
Mm-hmm.
If you're hard of spelling,
the bridge to the
going to blow people mind. I gotta go back and find that comment again.
Yeah.
Where was that? Oh God. Sorry, you guys can talk about that. I'm gonna talk about Athena.
Okay. Yeah, again, it's free. Use it for free. Try it, try it for free and give us feedback. We love feedback. We absolutely love feedback. It's interesting that we're in a position where Arch Public, if you go take a look, is getting extraordinary, let's just call it publicity for our customer service. Our staff is exceptional at getting back with people, helping people, assisting people very, very quickly. And
I did see a lot of compliments on the customer service, by the way.
Yeah, you'll find that feedback. So for us, under promise and over deliver both on product and performance, but more importantly on communication and service. And so, that's
one of the things
opposite of marriage, where you over promise and under deliver.
What are you talking about? I'm much better looking now than I was when I got married.
Obviously, I'm exactly as advertised.
Listen, the truth of the matter is that Bitcoin in the past has been had a high barrier to entry, in my opinion. It's been difficult. So accumulating it, trading it, using it in exchanges, all of those things are becoming easier and easier. And one of the things that was really frustrating for me early in my crypto journey was that I couldn't call anybody. I couldn't talk to anybody about problems I was having. No one would help me set up technology. I'd be trying to, do cold storage wallets or anything that was kind of innovative in the space. And it was like there was no customer service department at all to lean on. We are really passionate about serving our customers, and we want to help you. So if you have questions, whether it's things that we have the answer to or not, we're on your side. We want to help you find out the answers to those questions, and so far so good. We're pretty good at helping people find those answers. So come talk to us. We'd love to help.
Got the logos up there somewhere. We got the scrolly thing down at the bottom. Andrew didn't have to yell at me, but I was late on it. I was late on it, to be honest. We've got the website up here, Arch Public. You can follow them on X. You can do all the things. But guys, seriously, man, it's free. Just either try. The amount of insanity around John Deaton talking about this, by the way, on X was
it was awesome.
He's hacked.
Yeah,
I was like, no, he's literally on the show, talking about it right now.
John has the same thesis that we do. Is everybody should own some, and we should make it as easy to own it as possible, and we should make it as productive owning it as possible. And that's what we're trying to do. That's our mission.
Well, now we just did 56 minutes of this. And only one Kanye joke. Right before the show, I was trying to tell Andrew and Tillman about the South Park episode with Kanye. You guys have seen it, right? I'm going to tell you guys, we've done this, but I'm going to tell you, it's the funniest joke of all time, according to South Park. Do you like fish sticks? Yes.
Uh-huh.
Do you like fish sticks in your mouth?
Of course.
So you're a gay fish. That's Probably. The joke that is the premise, but Kanye doesn't understand it and spends 25 minutes of the show doing flowcharts I'm a genius, greatest of all time, gay fish sticks, and he doesn't get it. But then at the end, he accepts that he's a gay fish and does a whole music video underwater making out with fish.
Incredible.
I haven't seen that.
We've gone
next Tuesday. I'm just playing the entire episode while we watch, and then we'll tell you about some algorithms. It's gonna be amazing. It's gonna be so good. All right, guys, that's obviously all we got. Check out Arch Public. Tillman, Andrew, thank you so much. Appreciate you as always. And we will see all of you people very soon. Goodbye.
Let's go.